about to leave, already packing. Come with me, I'm not really asking. We'll get away to a place where we don't know. About to see the world in action, what we can be, life with no distractions. We'll get away, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out, die with my own doubts. Be free with me. Let's be free with Not looking back, eyes on the freeway, Bonnie and Clyde, a classic cliche. We're on the run, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out, die with my own doubts. Be free.
Hi, it's Jim here at TutorDU. Welcome to our 10th live GCSE Business revision session, and our last for this term actually. We're going to take a break and put our feet up, like hopefully you are too, back again in January. So number 10, I think we're dealing with the economic climate, so it must mean that we're with Mike and Pete, is that right?
That's correct, Jim, yeah.
Afternoon, Jim. Afternoon, Mike.
Good to see you both. Many thanks, as always, for joining us live, everyone who's joining us live, and also, of course, to Mike and Pete for putting this session together and delivering it after another busy day of teaching. We've got about 30 minutes or so of activities to go through. As always, if you're with us live, use the live chat either to put your answers in, which would be fantastic if you do that, but also if you've got any questions as we go, because it's some quite tricky concepts in this session, just ask away and we'll try to pick up your comments and questions and deal with them as we go. And if you're watching on replay or catch up, we can't see the live chat, but hopefully you'll be able to pause the video, maybe give yourself a bit more time. We've added in a couple of festive themed activities tonight, just to give it a bit of a festive twist, because we're almost there, aren't we? Almost there to the Christmas holidays.
Yeah, not long to go now.
Not
Final
long,
stretch.
But 30 minutes, next 30 minutes, exam goal, particularly for Year 11 students, if you've got mocks and assessments coming up. Right, I don't know who's kicking off, but I know it's going to be a great session. Who's going to start?
It's me this afternoon, Jim.
Fantastic.
We'll start with the big reveal. Time-honoured fashion, here's the big reveal. You need to name the business that's behind the clues. You're going to get 5 clues, and you need to try and name the business. You can put your answer in the chat window if you're watching this live. You can have as many goes as you want. If you're watching this on the download, then you won't be able to join in, but you can still have a guess. So here's clue number 1. Its first store was opened in 1864 in Oxford Street in London. First store opened in 1864. Not surprisingly, very few answers so far. Always a good guess. Is it Apple? No, it's not Apple, but well done for having a go. Here's clue number 2. The business has a written constitution that sets out the principles and rules of how it should be run. So it's a written constitution, this business. Tesco is also a good guess. It's not Tesco. I've not seen a correct answer yet. Clue number 3, please. The business bought a supermarket chain in 1937, which it still owns today. There's a big clue there. It bought a supermarket chain in 1937, which it still owns today. Remember, you can have as many guesses as you want if you're watching this live. Clue number 4, please. It's the largest employee-owned business in the UK. So it's the largest business owned by employees, by workers in the UK. I haven't seen a correct answer yet. There might be a few coming through now. Let's have a look at clue number 5. Its Christmas ads have featured Moz the Monster, Edgar the Dragon, and this year an alien as an unexpected guest. There is a huge clue. It's not M&S. It's not Sports Direct either. Let's have a look. Amelia has got this. Amelia got this after the 4th clue. Well done, Amelia. It is, of course, the John Lewis Partnership. John Lewis Partnership. Well done if you got that right. Amelia was the first in with the correct answer. So let me hand over to Pete for our first activity related to the economic environment.
Thank you very much, Mike. So what we've got here, we've got the Tutor to You bingo machine is about to spin into action, and what we're looking for is 6 economic factors that affect businesses. So in the chat window, can you think of 1, 2, 3, even if you get 6, it doesn't need to be all at the same time, but quick fire. Let's see what you can come up with. So let's get the bingo machine rolling, Jim. And we'll just wait a couple more seconds to see if there's any thoughts coming through the chat window. 1 at a time's fine. Doesn't have to be necessarily be all 6. So what from the external environment, the economic environment, could affect business decision making? Interest rates from Charlie to start off with. Good point. Inflation, because it affects costs. Let's take a look at our first bingo ball. Interest rates. Excellent work. Okay, so the cost of borrowing money is definitely going to be an impact that affects businesses. Of course, an increase in interest rates will increase a business's costs on variable rate loans. Of course, if the rate's fixed, then they're not going to see those increased costs. Exchange rates we've got coming as well from Jim and from Amelia. Let's take a look at our next point. Levels of income. Maybe the exchange rate is to come a little bit later on. So consumer income levels, of course, that is going to affect demand, and that's going to be influenced by things like unemployment too. Let's take a look at our next point, exchange rates. Quick fire off the mark now. So we've got, if we look back at the chat window, we've got 2 of these that have been picked out so far. Excellent. So this is particularly going to affect those businesses that trade internationally. So an exchange rate being the price of one currency expressed in terms of another. It's important that you don't say the exchange rate because there's many different ones. Let's take a look at our next economic factor. Level of unemployment. Charlie again, quick off the mark, and Jim back in the studio. Level of unemployment. And also what's particularly important with this point is we're thinking a little bit wider. There's obviously different rates of unemployment for different regions in a country. Excellent work so far. The level of taxation. So each year in the budget, the Chancellor, Rishi Sunak, tinkers with his fiscal policy. Levels of taxation will affect businesses in terms of the corporate tax levels, the tax they pay on their profits, but also personal income taxes. And last but by no means least, I think we had this one earlier, inflation. Okay, the general average increase in terms of price levels within an economy. Of course, there's a number of different factors that affect inflation. It can come from lots of consumer demand, and it can come from increases in business costs as well. So those are sort of 6 key areas that we've picked up 6 key economic variables. There are more than those, okay? And what it's important that you're able to do is explain how and why they have an impact. So with this topic, there's lots of key terms that you need to get your heads around and being able to recall and explain in exams or assessments. So the economy, the UK economy, is made up of a number of key actors: the government, individual consumers, and all different businesses that exist in the nation. The decisions that these groups make determine what is produced, sold, and bought in the UK. The term the economic climate refers to how the UK economy is performing, and this needs to be measured. And one of the ways which we measure the performance of an economy is the value of gross domestic product, or GDP. And GDP is the total value of all goods and services produced by a country in a year. If the economy is doing well, if there's lots of confidence, more goods and services will be produced and sold, and there'll be more money spent and received by the government and, of course, businesses as well. The economic climate's a topic area that's featured in all GCSE specifications, regardless of your board. However, as I mentioned earlier, there are different factors per specification. So taxation and inflation are included in the Edexcel course and WJC Educas, but not in AQA. So, as we said earlier and in previous sessions, it's important that you refer to the specification for your specific course to ensure that you're covering the relevant content in your revision. Because as we know, time is of the essence and you really need to plan your revision carefully. So in this session, what we're going to do is focus on some common areas: employment levels, consumer incomes, interest rates, and exchange rates. I'm now going to hand you over to Mike for a bit of Beat the Teacher.
Thanks, Pete. So we'll build on that and we'll look at employment and consumer income levels. Before we do, just draw your attention to some of the comments in the chat window there. And Jim's made a very useful point, lots of useful points, but in an exam, if you're talking about GDP, write GDP. You don't need to write out full gross domestic product. Save yourself a bit of time. And there are lots and lots of key terms in this topic. So it's important to spend some time and just familiarize yourself with all of them. So Beat the Teacher, looking at employment and consumer income levels. And there are a number of deliberate mistakes on the next slide. And your task is to try to spot them. You can put them in the chat window if you're watching live, put them in one by one. I'll tell you there are 5 errors in total. So it currently reads, the government will aim to have high unemployment levels in the economy. If more people are in work, the level of consumer incomes will fall. This means more money will be spent on goods and services, particularly luxury or essential products such as eating out. If unemployment levels are low, wage costs may fall. This is because there will be fewer staff available to fill job vacancies. To attract workers and encourage them to move jobs, businesses may need to increase pay levels. Businesses may therefore see a reduction in revenue levels due to the increase in costs. So there are 5 mistakes in total in that passage. We're looking for 5 errors. Okay, and you can put them in the chat window one by one. So try to find 5 mistakes. Thanks to Charlie, Amelia, and others who have found or potentially found some errors already. Keep them coming. Remember, there are 5 in total. And of course, there may be 1 or 2 that it could be the mistake could be a different word. I think one of those has been highlighted already. A few more seconds. If you're still working, trying to spot the mistakes, remember, deliberate mistakes, of course. Try to spot the 5 mistakes. Let's have a look. Here are the errors. So the government will aim to have high unemployment levels. The level of consumer incomes will fall. We've got luxury or essential products. We've got wage costs may fall. And we've got a reduction in revenue levels. So let's look at what it should have said. The government will aim, of course, to have low unemployment levels in the economy. Charlie's pointed out, of course, that the government may aim to have high employment levels. But in this case, we've gone low unemployment levels in the economy. If more people are in work, the level of consumer incomes will increase. More people are working, therefore consumer incomes will increase. This means more money will be spent on goods and services, particularly luxury, or should read non-essential products, such as eating out. So non-essential is our third error. And of course, if unemployment levels are low, wage costs may rise. This is because there will be fewer staff available to fill job vacancies. In order to attract workers and encourage them to move jobs, businesses may need to increase pay levels. Businesses may therefore see a reduction in profit levels due to the increase in costs. If you read the comment that Jim has just put in the chat window, unemployment levels in the UK are quite low at the moment and wages are rising because there's a shortage of workers and lots of employers who are wanting to recruit. So there you are, this theme, this concept in action. Can we go on to the next slide? Our next activity is called Give Me Three. You're going to have 30 seconds here, although we might be generous and give you half a minute. Give us 3 types of decision a business may take to respond to a fall in consumer spending. So 3 things a business may do in response to a fall in consumer spending. You can put them in the chat window one by one. Here we go, half a minute. And a few more seconds if you're still typing. Thanked Amelia for your response. Thank you, Charlie. Good answers here, some really good contributions. Please keep them coming. No mistakes here. We can just put our thoughts in the chat window and share them. Great stuff. Let's have a look at some possible answers then. Of course, there may be more responses than this. Amelia came in pretty much straight away with lower prices or decreased prices. Fall in consumer spending may make sense to reduce prices to try and increase demand, try and increase sales. Secondly, cut back on staffing levels. If the business is experiencing lower consumer spending, lower revenues, they may cut back on staffing levels. They don't need as many staff if they're not as busy. And number 3 here, change promotional activity to focus on value. So promotion, of course, communication with customers, trying to focus on value in order to persuade consumers to buy the product. Amelia again has talked about more promotion, advertising or deals with products, and that might tie in with pricing. And Charlie talked about offering essential goods too, or trying to create the impression, I suppose, Charlie, that the product is essential, trying to make it more important so that consumers buy more of it. Great stuff, superb contributions. Let's remind ourselves of a few key terms then. Some more key terms here for you. So unemployment is the number of people that are not in paid employment but are available to work. They're not in paid employment, but they are available to work. Consumer spending is about the value of essential and non-essential products being bought by consumers over a period of time. So consumer spending, the value of essential and non-essential products being bought. And remember, there is a relationship between the employment level in an economy and the level of consumer spending. The higher the level of unemployment, the lower amount of consumer spending. And that beat the teacher exercise we looked at before explained that in more detail. Some exam gold. Remember that not every product will be affected in the same way by a change in employment and income levels. Some products will be hardly affected at all by these changes. So, for example, everyday items, essential items such as milk and bread. However, businesses that sell luxury, more expensive products may see a more significant change in demand. So, for example, designer clothing. Remember, in an exam situation, keep applying your understanding of theory to the context given. That will, of course, help you to move up the mark scheme. So think about the context, think about the type of product or products that the business in a case study is selling, and then you can apply your answer much more effectively. I'm going to hand over to Pete now for a 20-second challenge.
Thank you, Mike, and I've been waiting eagerly for this one. This is Melted Snowman Christmas version of the 20-second challenge. You've got 20 seconds to answer the question before the snowman melts. Okay, let's take it away, please, Jim. So name one business or type of business that will benefit from a rise in interest rates. Answers in the chat window, please, folks. What do we think? Tough one, tough question. Really assesses our understanding of how interest rates work and really gets us thinking about different contexts. Just wait a couple more seconds to see if anyone's typing in the chat window. Okay, got a couple of answers coming through. Charlie's mentioned investments and stockbrokers. More will save or invest, quite possibly. Interesting ideas here. Well done, folks. Amelia says a low price supermarket like Aldi. And then she's gone on to give an explanation as well. So, of course, there's a number of different points that we could raise here, and Anne's come up with the one that gives loans, possibly like a payday loans company, businesses that sell to wealthy people as well. So, lots of different ideas. Really well done. We had some of these points, so don't worry if yours are slightly different to ours. Budget or value retailers such as Aldi, Lidl, Poundland. If we think about why that may be, as interest rates increase, people on average are going to have less disposable income, and therefore they may switch their spending to budget and value retailers to maximize what limited income that they now do have. Okay. Second point, DIY businesses such as B&Q, perhaps, as more people decide to remain in their own home, spend some money on redecorating, some maintenance, rather than deciding to move. Okay, so there's a number of different examples you could have had here. What's key, as usual, is developing that contextual explanation. Okay, and Jim's just popped in the chat window that people on a mortgage will have a lower disposable income, particularly those individuals who might be on a variable rate mortgage. So that's if the interest rate changes. Okay, we've got another 20-second challenge coming up here. Okay, this time, name one business or type of business that will benefit from a fall in interest rates. 20 seconds. Let's see some answers in the chat window, please. So we don't have long whatsoever until the snowman melts. I'll just give you a couple more seconds in case anyone's still typing. Amelia's coming quickly with a luxury car dealer. More people are more likely to spend more money rather than save it. Of course, we can look at interest rates in two ways, can't we? They're the cost of borrowing, but also the reward for saving. And if interest rates fall, you get less of a reward for saving. And estate agents. Banks, of course, are going to be able to offer more, may offer more loans. Interesting point. Let's have a look at our answers that we've come up with. Businesses that sell higher value items, such as car manufacturers, luxury holidays, branded goods, really goods and services that are possibly quite price sensitive. and quite high value. Estate agents and house builders, of course, will benefit too, as with a fall in interest rate, it's going to be cheaper to get a mortgage, and therefore other things staying the same. We might expect more people to want to buy a house, and therefore estate agents will be busier because they'll have more queries for people wanting to purchase a new home. So absolutely fantastic contribution in the chat window. Really well done. We're now going to move on to a bubble quiz. What we have to do here, and some of you who've been on these before and have watched previous revision blasts, the number of answers that you're going to see on screen can be correct. They can all be correct, or none of them can be correct. Okay, 2 or 3 might be correct. So the aim is for you to identify the correct answers. So which of the following is the correct definition of an interest rate? What do we think, folks? Answers in the chat window, please. The amount of spare income that people have to spend, the cost of borrowing, the value of one currency against another, or the reward for saving. Okay, what answers are we going to put in the chat window? If you think all 4 are correct, put A, B, C, or D. If you think only A is correct, put A. So no need to type them all out. Charlie's gone for the cost of borrowing, reward for saving. A couple more seconds. Amelia's gone for B and D. Let's take a look. Excellent work, folks. B and D are correct. Okay, I think I might have alluded to this one earlier. So that's how we would define an interest rate: the cost of borrowing money and the reward, the interest that you're going to earn from saving money in an account. Okay, next question, please, Jim. So we're now thinking, we're going from the definitions to the impacts. Which of the following would be an impact if there was an increase in interest rates? Consumers and businesses may save more, lower demand for many goods and services, a reduction in investment from businesses, or costs are going to increase. What do we think is correct here? Couple more seconds. Thinking about the impacts, developing those chains of reasoning and analytical skills. Let's take a look at the answer, please, Jim. All of them. Okay, so maybe we were thinking there, which of these, and we were struggling to type, okay, because there's quite a lot of potential thoughts going on. All of those answers would be correct if there was an increase in interest rates. Consumers and businesses may save more because of higher reward for saving, lower demand for many goods and services because it's going to cost more to borrow money. The same explanation can be applied to a reduction in business investment because the loan will cost more. And if existing loans have got variable interest rates, costs as well may increase. So all of those could be impacts. As we've said earlier, the key is developing those analytical chains of reasoning. So some exam gold. Interest rates are the cost of borrowing charged by a lender or the reward for saving. It's important that you remember that they are expressed as a percentage. Interest rate changes will not impact every business in the same way. So Mike mentioned about context earlier. Some businesses and products will be affected more than others. It depends how exposed they are to the change in interest rates. For example, budget food retailers will benefit more when interest rates are higher or increasing because consumers will have less disposable income or spare cash. And we've said it on numerous occasions, but it's so important to realise that every business is different. And it's really important to look at the context featured in an exam paper carefully to ensure that you're applying the knowledge correctly to a case study. I'm now going to hand you over to Mike for a 30-second challenge.
Brilliant, Pete. So we're going to do a calculation question. As the name suggests, we're going to give you 30 seconds on this. The exchange rate is £1 to $1.80. So how much would a UK business pay to import $540 worth of raw materials from America? 30 seconds. Good luck. And 30 seconds on that may be quite ambitious. Do not worry if you're still working. Obviously, if you're watching this on the download, you can pause and you can give yourself a bit more time. Answers starting to come through now. Thank you for those. Exchange rate £1 to $1.80. How much will $540 of raw materials cost if imported from America? I've seen a correct answer already. Amelia, once again, quick in with that one. The answer, of course, is £300. In this case, we take the 540 and divide it by the exchange rate, divide it by £1.80, sorry, by $1.80. So it equates to £300. At that exchange rate, $540 of raw materials will be the equivalent of £300. Well done if you got that right. Let's look at another one then. This time the exchange rate is £1 to $1.50. How much would the UK business pay to import $540 of raw materials from America now? Should be more straightforward. 30 seconds. Here we go. Great stuff. And we've had some correct answers through already. Amelia and Charlie, thank you for those. £360 is the correct answer. Once we understand the format, once we understand the formula we're going to use, it becomes much more straightforward. So this time we divide 540 by 150, and the answer here is £360. So the change in the exchange rate from £1 to $1.80 to £1 to $1.50 means that the same volume of raw materials is going to cost more. It's gone from £300 to £360. So imports become more expensive as the exchange rate falls. Well done if you got that right. Let's remind ourselves here of some more key terms. We said it was key terms heavy, this topic. So exchange rate shows the value of one currency in relation to another. Imports are goods and services that are purchased from other countries. They, of course, may be raw materials, they may be finished products. Anything that's bought from other countries into the UK counts as an import. Exports are goods and services sold to businesses in other countries. It's important to get this the right way round. I find students often get confused between imports and exports. So be clear on those definitions. And exchange rates, as Jim's pointed out in the chat window, is an examiner favourite at GCSE because students find it challenging. So remember, when a business trades internationally, it will need to pay for the products in the currency of the country that it buys the goods or services from. Therefore, changes in exchange rate will affect how much of the foreign currency can be bought per pound. In other words, changes in the exchange rate will affect imports and or exports. Okay, so imports and exports will be affected by changing exchange rates. Let's go through a couple of worked examples. This useful reminders. So we've got an exchange rate pound to US dollars. Last month, £1 bought $1.25. This month, £1 buys $1.60. So each month, a UK business imports raw materials from America worth $200. Last month, therefore, the UK would have converted £160 of GB pounds, £160 to pay the American firm. So the $200 worth of materials divided by 1.25 means they would have spent £160. This month, the same raw materials will cost the UK business £125. 200 divided by 1.6 is 125. So the appreciation, the increase in the exchange rate has resulted in a reduction of business costs for the UK business, which should then lead to an increase in profits. The business may also have more flexibility with its pricing decisions, so it may decide to reduce prices in the UK. If the appreciation looks like it will continue in the long term, they may decide to do this. but the change in the exchange rate, in this case an appreciation, an increase, has resulted in a reduction of business costs. Worth remembering. Here's a second example. So same exchange rate changes, £1 to £1 to $1.25, £1 to $1.60. Each month, a UK business exports finished goods to America. It wishes to generate £10 from each unit sold in America. Last month, the selling price for each unit in America was therefore 10 multiplied now by 1.25, which means it would sell for $12.50 in America. This month, however, because of the change in the exchange rate, the selling price of the same product has risen to $16, 10 multiplied by 1.6. So this is a negative for the business. It's a bad thing, as the increase in price may lower demand for the product in America. In America, that product is now selling for $16 rather than $12.50. So it's gone up in price, and therefore American consumers are likely to buy less of it. This means that sales volume and sales revenue may decrease, which would negatively impact profits. Remember, the UK business has done nothing different. It's the exchange rate that's changed here. So depending on the product and the nature of the market, the business may choose to keep the price at $12.50 in America in order to remain competitive. In doing so, it will receive a lower selling price in pounds for each unit sold. Okay, so they may decide to keep the price the same in America. That, of course, means that they will receive less pounds for each unit sold. Remember, we said this can be potentially very confusing, so it's worth looking back through this, downloading this, and looking back through these examples. Pete, I'm going to hand over to you for some two-statement MCQs.
Thanks, Mike. I definitely agree with you with the point of getting the PowerPoint, downloading it afterwards, because it's those really logical worked examples that help students out in the end, like what you've been through there. So we've got two-statement MCQ here. Your job is to tell me whether they are true or false, depending upon the options on screen. So statement one, an appreciation of the pound against the euro makes UK exports into Europe more expensive. Statement two, an appreciation of the pound against the euro makes UK exports into Europe cheaper. So two statements there. If you think statement one is true and two is true, put A in the chat window, please. If you think one is true and two is false, it's B. If you think one is false but two is true, it's C. And if you think they're both false, it's D. So have a think about what Mike went through with the earlier example and put your thoughts into the chat window. So we're really thinking about the impact of exchange rate movements here. A couple more seconds. We're really trying to think about how changes in the value of the pound will impact the level of exports given the price. Okay, so this is a challenging topic, and this is what examiners like to test, because it really tests students' understanding when they've grasped the logic of how exchange rate movements work. Tough topic. Amelia's coming with B. A couple more seconds to see if anyone joins with another answer. Okay, let's reveal the answer, please, Jim. It is B. Well done. Okay, so if the pound appreciates, that means the pound has got stronger. And if a business exports into Europe, that means those UK exports will be more expensive for those European consumers. Let's take a look at our next question. A depreciation of the pound against the US dollar makes imports into the UK from America cheaper. Statement two, a depreciation of the pound against the US dollar makes imports into the UK from America more expensive. So, same logic as before. If you think statement one's correct and true, put A. If you think statement two is true, A, sorry. So if one is true and two is true, it's A. If one is true and two is false, it's B. If you think one is false and two is true, it's C. And if you think they're both false, it's D, please. So last time we went with the appreciation. This time we're depreciating. couple more seconds. Lots to think about here in terms of the movements. Let's reveal the answer, please, Jim. It's C. Okay, so statement 1 is false. So a depreciation in the pound against the US dollar will not make imports into the UK from America cheaper. That depreciation of the pound, however, will make imports into the UK from America more expensive. So what we're going to do in the next couple of slides, because that is sometimes can be a little bit tricky for students to get their heads around, we're going to explain them. Okay, so if the exchange rate changes, that currency, and it appreciates, then that means it will be worth more. So what's the implication of this? This means that it will cost more for businesses located outside of the UK to buy UK currency, in other words, pound sterling. So if it appreciates, it's going to increase costs because you've got to fork over more of those pounds to get the foreign currency. Okay. It will also be cheaper for businesses located in the UK to buy another country's currency. So there's two sides to this. We're looking at imports and exports. So this means that imports into the UK will be cheaper and exports from the UK will be more expensive. So always think when you're tackling a question on exchange rate, who's the buyer, who's the seller, who's the importer, who's going to be the exporter. When you've got that in your mind, you can think about the impacts. On to depreciation this time. Depreciation means that the currency will be worth less and it'll be cheaper for other countries and therefore businesses to buy. Fluctuations in exchange rates cause uncertainty in business, and therefore the knock-on consequence of this is that it impacts decision making. Long-term changes, so over a number of years, may discourage businesses from trading internationally, as it will impact their bottom line level of profits. So it's really important that you download these slides afterwards and go back and refresh your memory with something that you may or may not be completely sure about. Okay, but hopefully this will help. A very useful acronym to help you remember the impact of an appreciation is SPICED. Okay, SPICE stands for strong pound, imports become cheaper, and exports become dearer. You can reverse this acronym to show the impact if the pound depreciates against another currency. And the reverse of that is whiydeck. Weak pound, imports dear, exports cheap. So keep those acronyms at the back of your mind. And if you do that, you should really be able to tackle movements in exchange rates with some relative ease and certainty. Some exam gold. You'll not be asked to calculate exchange rate conversions in an exam, but it's important that you can explain the impact of a change in the exchange rate in terms of what it has on sales and profits of different businesses. I think we've said this earlier, but questions featured on exchange rates tend to be poorly answered by students, so that's why I think examiners put them in to test our knowledge and understanding. Remembering the acronym SPICE and whiydeck will help you understand this topic better. You don't need to know the reasons or causes behind any economic change that we've referred to in this session. You should focus your revision on how changes in the economic factors in your specification impact different types of businesses. So what are the knock-on effects rather than the underlying causes? These impacts may be positive or negative. It's important that you have a sort of broad brush approach, that you can recognize the links between different economic factors. So if interest rates rise, businesses may see a fall in demand and therefore reduce their production levels and lay off staff. If we think about this on aggregate overall, this will lower income levels and the amount of consumer spending. Now, those pushing for top grades, which I'm sure you all are, making links between topic areas is vitally important and will help you understand the interdependent nature of business, which comes into account when we're looking at those higher value, those higher tariff answer questions found in your exam papers.
Wow. That's it. That's the end of our. I'm just thinking about exchange rates and in particular the sort of the complications there in terms of trying to understand who wins and who doesn't when exchange rates change. we've left the hardest till last, haven't we? In many ways, do you think, in terms of the
Yeah,
core
Yeah,
topics this term?
Yeah.
I think so. But it's worth remembering that you won't be asked to do those calculations in an
Exactly.
exam. You just need to understand the implications for businesses. And Peter's point at the end there about finding the links between some of these different concepts is the route towards a better understanding, I think.
Yeah, and thinking about the knock-on impacts and effects.
Well, a fantastic way to end our series of 10 live GCSE business sessions this term. And many thanks to everyone who's joined us live. I know, just looking at the stats, hundreds, in fact, several thousand, almost 10,000 students have watched the GCSE sessions on replay this term, which is fantastic. And hopefully you've found them useful. We've tried to pick 10 core topic areas, break even, budgeting, economic environment, marketing mix, that are pretty likely to be crucial next summer. And as Pete mentioned, go back, download the slides from this and all the other sessions. If I get my hand in the right place, if you go to tutortu.net/live, go to the replay section and select business GCSE from the drop down filters there. You'll find all of the sessions that Pete and Mike and Graham and Susan have done this term, but also earlier in 2021 we did loads just before the summer as well. So bound to be something that's useful for you as you get ready for your mocks and other assessments over the coming weeks. And I guess from all of us, Mike and Pete, good luck to all the students. You've got mocks coming up in the near future.
Absolutely. Yeah. Good luck, everyone.
Definitely. Good luck, folks. All the best.
And well, we're going to take a break now, but we are back in next half term, and I think we're going to change the format slightly and do a little bit more short answer questions, exam style questions with a bit of application, with a real focus on application. That's going to be our focus across the live streams next half term, which should be a little bit different. We'll still do some nice knowledge based quizzes, but more on application, which I think is a skill that can really pay you some dividends in terms of marks in the exams. But for now, we just hope that you get a chance to put your feet up, have a great break, relax and enjoy yourself. Keep studying, of course, just to keep your eye in, and hopefully you'll be able to join us in 2022. But from all of us, from Mike and Pete and myself, we'll see you later.
Goodbye.
Thanks. Bye, folks.